Every trader enters the market believing the right strategy will unlock certainty. They search for the perfect entry, the perfect indicator, the perfect signal that will finally erase doubt. But the truth is far more liberating and far more uncomfortable. No strategy carries certainty, only probability. And until you embrace that reality, every method you touch will eventually break down, not because it failed, but because your mindset did. The real power behind any trading strategy isn't the pattern, the rule set, or the system you follow. It's the psychological framework you bring to it. A framework built on acceptance, not prediction. On execution, not hope. On discipline, not emotional negotiation. If you can learn to treat every strategy as a tool, not a savior, then you'll discover something most traders never reach: the ability to operate freely in uncertainty. That freedom is the birthplace of consistency, and consistency is the only path to long-term success in this business. Today, we're not just explaining strategies. We're explaining the trader behind the strategy. Because once you understand how your mind shapes your performance, every method suddenly becomes clear, simple, and executable. A strategy doesn't make you consistent. Your ability to execute it without emotional interference does. This is the core truth most traders never understand, and it's the truth that separates the trader who survives from the one who gets consumed by the market. You can search for years, collecting indicators, patterns, systems, and holy grails, but nothing in the market will ever create consistency for you until you take responsibility for how you think and how you act in the face of uncertainty. Consistency is not built on a chart, it's built in your mind. Most traders believe their inconsistency is caused by the strategy they're using. They blame the rules, they blame the market conditions, they blame the indicators. But almost no one looks at the real source of their inconsistency, their emotional reactions. The strategy doesn't hesitate. The rules don't second-guess themselves. The system doesn't feel fear or hope. It simply is what it is. The only variable that changes from trade to trade is you, your thoughts, your expectations, your fears, your impulses. Until you learn to bring stability to your internal world, there can be no stability in your trading. The market is a constantly shifting environment. There is no certainty, no promise, no guarantee. Every trade is just a probability. The moment you understand this at a deep level, so deeply that you no longer resist it, you stop expecting the market to behave in a way that comforts you, and you start adapting yourself to the nature of uncertainty. When you accept that anything can happen, then you stop being surprised. And when you stop being surprised, you stop reacting emotionally. That is the foundation of consistency. Think about how most traders operate. They take a trade hoping for a win. They want to feel good. They want validation. They want the market to prove that the trade was smart, that they made the right decision. When the trade moves against them, they immediately feel threatened. They hesitate. They move their stop. They reduce their risk. They panic. Why? Because the trade wasn't executed with acceptance of uncertainty. It was executed with the expectation of certainty. And expectations are emotional. They are attachments. They distort perception. You cannot execute a strategy with precision, calmness, and objectivity if your emotions are constantly interpreting what the market does to mean something about you. Your worth, your intelligence, your future, your identity. The moment your ego gets involved, the strategy loses its integrity. It becomes corrupted by hesitation, by fear, by greed, by doubt. You may know the rules, but you cannot apply them. Execution is the real battlefield of trading. Not analysis, not strategy design. Execution. Because execution requires you to confront yourself, your fears, your insecurities, your desire to be right, your resistance to loss, your desperation to avoid pain. The market exposes all of it. That's why trading feels personal. But it is not personal. The market is not attacking you. The market simply reflects opportunity, neutral, indifferent, without concern for your emotions. To execute a strategy without emotional interference means you have learned to neutralize your internal reactions. You have learned to detach from the outcome of a single trade. You have learned that each trade is just one event in a long series of events, each with a random distribution of wins and losses. You know that your job is not to control the market. Your job is to control your execution. The difference between a winning trader and an inconsistent trader is not the strategy. You could give the same strategy to 1,000 traders. and the results would all be different. Why? Because the variable is the human being using it. Some will trade it fearfully, cutting wins early and letting losers run. Some will overtrade, forcing the strategy into conditions that don't suit it. Some will break rules when emotionally triggered. A few will follow the rules with discipline, acceptance, and psychological neutrality. Those few will find consistency, not because of the strategy, but because of who they are when they execute it. You must understand that every strategy, every single one, comes with a built-in edge. The edge is never 100%. It might be 55%, 60%, 65%, but never absolute. The trader who cannot accept losing will never execute the edge properly. They will exit too soon, enter too late, or avoid trades altogether because fear overrides logic. The trader who needs to win will sabotage themselves because needing to win means they are not prepared to lose. And if you are not prepared to lose, you cannot trade. The consistent trader understands this. Losses are part of the game, and they mean nothing about who you are. A loss is simply the cost of experiencing your edge over time. Nothing more, nothing less. It doesn't deserve anger, it doesn't deserve fear, it doesn't deserve emotional reaction. When you fully accepted this, your behavior changes. You stop micromanaging your trades. You stop emotionally negotiating with your own rules. You stop hesitating. You begin to flow with the market instead of resisting it. That's when the magic happens. Not because the market changes, but because you do. Every moment in the market is an opportunity to observe your mental state. Every hesitation, every flinch, every spike of excitement, every impulse to chase a candle or protect a winner too soon, it's all information about your internal environment. If you ignore this information, you will remain inconsistent forever. But if you take responsibility for it, if you discipline yourself to recognize your emotional patterns, then you begin to separate the part of you that trades from the part of you that reacts. You evolve from a reactive trader into a conscious executor. Think about the last time you hesitated on a valid setup. What happened in your mind? Did you imagine losing? Did you picture the pain of a loss? Did you catastrophize? Did you think the market was out to get you? That entire internal narrative reflects emotional interference. Nothing in that moment had anything to do with the strategy. It was all you. And that's okay. It's human, but it must be addressed. Think about the last time you closed a trade too early because the small profit felt comforting. That wasn't the strategy either. That was fear disguised as prudence. Fear of the trade reversing. Fear of losing what you temporarily gained. Fear of facing the unknown. The market didn't tell you to exit early. Your emotions did. Think about the last time you added to a losing trade because you didn't want to be wrong. That wasn't the strategy either. That was ego, your internal need to protect your self-image. The market doesn't reward ego, it punishes it relentlessly. You must learn to strip emotion out of the execution process. The goal is not to become robotic. The goal is to become neutral, detached, present, aware. You are simply executing probabilities, nothing more. Imagine a casino. The casino doesn't care about any individual outcome. It knows its edge. It executes that edge relentlessly. It never gets emotional about a big loss. It never gets excited about a big win. The casino wins over time because it executes consistently. You must become the casino in your trading. You must detach from the outcome of each individual trade. Your strategy is the edge. You are the executor of that edge. And your emotional discipline determines whether the edge plays out or not. Consistency is not something you get from the outside. It's something you build inside. It's the product of repeated, disciplined, non-emotional action. It's the product of aligning your behavior with probabilistic thinking. It's the product of choosing execution over impulse, acceptance over expectation, neutrality over emotional attachment. When you reach this point, trading becomes simple. Not easy, but simple. You see the setup, you take it. You set the stop, you accept it. You set the target, you commit to it. There is no negotiation. There is no internal debate. There is no emotional bargaining. There is only execution. This is what consistency feels like, internal stillness. The market moves, but you don't. Not emotionally, not mentally. You act because your rules tell you to act. You stay out because your rules tell you to stay out. Your emotional state is no longer driving your decisions, your principles are. And finally, you will understand the truth that every consistently profitable trader eventually discovers: the strategy is not what makes you successful. The strategy is simply the structure. You are the one who gives it life. You are the one who determines whether it produces chaos or consistency. The market will always react to your emotional weaknesses. It will always punish impulsive action and reward disciplined execution. But once you learn to execute without emotional interference, the market becomes a place of opportunity instead of frustration. You stop chasing. You stop fearing. You stop hoping. You simply act. You trust your edge. You accept uncertainty. You allow the probabilities to unfold. And that is the moment you transform from someone who trades into someone who is a trader. Every trading method works, but only for the trader who accepts uncertainty without fear. This sentence may sound simple, but it carries the entire psychology of successful trading within it. Most traders spend years searching for the perfect method, the flawless strategy, the indicator that will finally deliver certainty. They believe the right system will eliminate loss, eliminate doubt, eliminate unpredictability. But trading is not a search for certainty. It is a process of learning how to behave in an environment where certainty does not exist. The strategy is never the problem. The problem is the trader's relationship with uncertainty and the fear that grows inside them when they try to avoid it. The moment you step into the market, you step into a world where anything can happen. Every candle, every tick, every movement is the product of countless decisions made by millions of participants. No single method can control that. No analysis can guarantee the outcome of the next moment. If you try to force certainty onto a domain that is inherently uncertain, you create tension, fear, hesitation, and emotional conflict within yourself. And it's this internal resistance, not the strategy, that causes inconsistency. Think about this. If a method truly did not work, it wouldn't work for anyone. Yet, every method you see, trend following, mean reversion, scalping, swing trading, breakout strategies, supply and demand, indicator-based systems, has traders who use it successfully. That alone proves that methods work. But it also exposes the real truth. The difference between success and failure is not the method. It's the trader's ability to apply it consistently under uncertainty. Imagine two traders using the same strategy. The rules are identical. The signals are identical. The entry criteria and exit criteria are identical. Yet their results can be drastically different. One trades with calm acceptance, taking every valid setup, letting the probabilities unfold. The other hesitates, overthinks, cuts winners too early, avoids trades when fear spikes, breaks rules during drawdowns. The strategy didn't change. The market didn't change. The only difference was the trader's psychological state. One accepted uncertainty, the other resisted it. Fear destroys the effectiveness of any method. It distorts perception. It makes you see danger where none exists. It causes you to miss opportunities. It pushes you to interfere with trades, second-guess decisions, or prematurely take profits. Fear creates an emotional attachment to each trade, where the outcome feels personal, where a loss feels like an attack, and a win feels like validation. When trading becomes personal, your method becomes meaningless because you're no longer trading the system. You were trading your emotions. To accept uncertainty means to remove the emotional meaning from each trade. A trade is nothing more than a probability. It is not a test of your intelligence. It is not a judgment of your worth. It is not a reflection of your future. It is simply one event in a series of events. When you view it this way, the fear dissipates because you no longer need the outcome of a single trade to make you feel safe or validated. You don't need to be right. You don't need to avoid loss. You just need to follow your method. The market rewards the trader who embraces this mindset. It punishes the trader who fights against it. When fear controls your actions, you trade defensively, reactively, irrationally. You exit too soon because the temporary profit feels fragile. You skip a trade because the last one lost and your mind is still replaying it. You widen stops because you're afraid to admit you were wrong. You take impulsive entries because you're afraid to miss out. In every case, the strategy is no longer in control. You are controlled by fear. But when you accept uncertainty fully, you approach each trade with a neutral mindset. You understand that anything can happen. You understand you don't need to predict. You understand that a loss is not a problem. You understand that the only thing you truly control is your own execution. And when your mind becomes neutral, your execution becomes consistent. That's when a method, any method begins to work for you, not because it suddenly became better, but because you finally stopped interfering with it. Fear is a product of expectation. Expectation is a product of needing certainty. And the moment you need certainty, you set yourself up for emotional pain because the market is not designed to give it to you. When traders expect a win, fear arises the moment the trade moves against them. When they expect a continuation, fear arises the moment price stalls. When they expect a trend, fear arises the moment a candle prints in the opposite direction. The fear is not coming from the market. The fear is coming from the expectation that the market should behave according to their wishes. The trader who accepts uncertainty does not have these expectations. They don't need the market to do anything. They don't need comfort, validation, smooth equity curves, or perfect trades. They need only one thing: the discipline to execute the method as it was designed. They understand that losing trades are part of the game, not violations of some imaginary promise. They understand that the method has an edge that plays out over time, not trade by trade. They don't judge the method after one loss or two or five. They don't panic when the market produces randomness. They don't sabotage their results because of temporary discomfort. This kind of trader is dangerous in the best possible way. Dangerous to their old fear-based patterns. Dangerous to the emotional weaknesses that once dictated their decisions. Dangerous to the excuses that kept them inconsistent. When a trader no longer fears uncertainty, they become powerful because they no longer fight the market, they harmonize with it. They become able to trade patterns without emotional attachment, losses without emotional pain, wins without emotional euphoria. You may believe you need a better system. You may think your current strategy doesn't work. You may think the market changed. You may think you need more indicators, more confirmations, more filters. But the real change that needs to happen is internal. Because the truth is this: if you cannot execute a simple method with discipline and acceptance, you cannot execute a complex one either. Complexity won't cure fear. More rules won't cure uncertainty. A stronger signal won't cure hesitation. The only cure is psychological evolution. You must learn to trust your method, not because it will always be right, but because you will always be disciplined enough to follow it. Trust is born from acceptance. When you accept uncertainty, you no longer fear a trade going against you because you know it's part of the probability distribution. You no longer need to predict the next candle because prediction is unnecessary when probabilities guide you. You no longer question whether you should take a trade because the rules already answered that question. Your mind becomes quiet. Your actions become clear. Your method becomes alive. Every trading method works for the trader who can execute it without emotional interference. Every method fails for the trader who cannot. The market doesn't care which strategy you choose. It doesn't reward brilliance. It doesn't reward complexity. It rewards consistency. It rewards the trader who is aligned with uncertainty instead of fighting it. It rewards the trader who understands that the outcome of the next trade is irrelevant compared to the outcome of the next 100. When fear no longer influences your behavior, your method finally has the chance to express its edge. It becomes consistent because you become consistent. It becomes profitable because you allow it to be. You stop self-sabotaging your process. You stop trading based on feelings. You stop interfering with the probabilities. And for the first time, you begin to experience what real trading feels like. Not the emotional roller coaster, but the calm, disciplined, almost meditative execution of a repeatable process. This is the transformation every trader must go through. It is not about mastering the market. It is about mastering yourself. The strategy you use is nothing more than a mirror reflecting your inner state. When you fear uncertainty, the method seems unreliable. When you accept uncertainty, the method becomes powerful. When you fight randomness, trading feels chaotic. When you embrace randomness, trading becomes structured. Accepting uncertainty is not a technique. It is a mindset shift. It is the moment you realize that you do not and cannot control outcomes. You can only control your actions. And when you commit to controlling your actions with clarity and discipline, every method begins to reveal its potential. Every edge begins to express itself. Every rule begins to make sense. In that moment, you stop searching for the perfect strategy because you realize something profound. The perfect strategy is the one you can execute without fear. And when you reach that level of psychological freedom, you discover that the method was never the key. The market doesn't reward complexity. It rewards clarity, confidence, and commitment to a probabilistic edge. Yet most traders spend their entire journey building layer upon layer of complexity, believing that the more indicators they add, the more rules they write, the more confirmations they demand, the safer they will feel. They chase complexity because complexity creates the illusion of control. It gives them a sense of safety, even though the market does not operate on certainty, does not care about their indicators, and does not behave according to the intricate systems they construct. Complexity becomes a psychological shield, not a trading edge. The truth is that the market is not defeated by complicated thinking. It is navigated by clarity. Clear thinking, clear rules, clear expectations. Clarity frees you from emotional chaos. Complexity amplifies it. When your chart looks like a puzzle, your mind becomes a puzzle too. You hesitate because the signals contradict each other. You doubt because one indicator says long, another says short, and a third says stay out. You lose confidence because complexity destroys your ability to trust what you're looking at. The market doesn't punish you because your strategy is wrong. It punishes you because your internal world is not aligned with decisive action. Clarity is the first ingredient of consistency. A clear edge allows you to see opportunities without confusion or hesitation. You know what qualifies as a setup and what doesn't. You know where you're wrong and where you're right. You know when you should act and when you should stay out. There is no internal debate, no last-minute emotional negotiation. You trade what you see because the rules are simple enough to follow, even when emotions arise. Confidence is the second ingredient, and it doesn't come from winning. It comes from understanding. You must understand your edge deeply enough to trust it even during losing streaks. Confidence comes from knowing the probabilistic nature of the market, not from believing you can predict it. A confident trader is not someone who is certain about outcomes. A confident trader is someone who is certain about their process. They trust their edge because they have accepted uncertainty. They trust their rules because they understand randomness. They trust themselves because they've trained their minds to remain objective in the face of ever-changing variables. Commitment is the third ingredient. Commitment means execution without deviation. It means following your edge even when fear whispers in your ear, even when doubt clouds your judgment, even when the last 3 trades were losers, and your brain is desperately trying to convince you that something is wrong. Commitment means you stay loyal to the plan because you understand that consistency is not built on the outcome of a single trade, but on the accumulation of many trades executed according to the same principles. Without commitment, clarity dies and confidence collapses. The market rewards this trio, clarity, confidence, commitment, because they reflect a trader who has embraced probability rather than prediction, a trader who has accepted uncertainty rather than resisted it, a trader who has stopped trying to control the market and instead learned to control himself. Look at the traders who struggle. Their charts are crowded. Their minds are crowded. They jump between strategies. They adjust rules constantly. They overanalyze, over-optimize, overcomplicate. They believe that more information equals more certainty, but the market does not deliver certainty no matter how much information you gather. And so complexity becomes a trap that leads to paralysis, indecision, emotional instability, and eventually destructive behavior. They keep adding tools because they are afraid. They keep adjusting rules because they are insecure. They keep searching for the perfect signal because they cannot accept the nature of the market. The trader who understands the market sees through this illusion. They understand that simplicity works because simplicity is executable. They know that every methodology, no matter how intricate, ultimately boils down to a simple probabilistic edge, a pattern, a condition, a repeatable scenario. The trader who is able to act on that scenario consistently has an advantage over the trader who complicates the process until no action is possible. Clarity gives you vision. Confidence gives you courage. Commitment gives you consistency. Imagine a trader who uses a simple breakout strategy, nothing complex, a clean level, a clear structure, a confirmed break. That's it. Now imagine this trader executes that setup 100 times. They don't skip trades because they don't feel it today. They don't take trades that don't meet the rules just because they're bored. They don't bail out early because one candle pulled back. They don't panic after a loss. They simply execute the edge again and again with clarity, confidence, and commitment. Over time, this trader wins, not because the strategy is magical, but because the trader is stable. Now imagine another trader using the exact same breakout strategy. But this trader lacks clarity. He added 10 indicators to confirm the setup, and now nothing aligns. He lacks confidence. He questions every trade. He lacks commitment. He changes his mind when emotion strikes. He hesitates, researches, hesitates again, then enters too late or exits too early. Over 100 trades, this trader doesn't express the edge. The strategy didn't fail. The trader did. The market rewards the first trader and punishes the second. Not because the market is fair or unfair, but because trading is not about finding a system that ignores uncertainty. It's about becoming a trader who can operate in uncertainty without losing clarity, confidence, or commitment. The more complex your system, the more fragile your execution. Complexity adds friction. It adds emotional noise. It adds hesitation. Simplicity allows for fluidity, for mental ease, for decisiveness. A clear edge is your anchor. A complex system is your enemy because complexity invites confusion, and confusion invites fear. The market knows when you're afraid, not literally, but through your behavior. Fear shows up as hesitation. Fear shows up as premature exits. Fear shows up as missed opportunities. Fear shows up as rule breaking. And the market punishes all of those behaviors immediately and without mercy. Fear is the destroyer of edges. But fear thrives in complexity because complexity creates uncertainty in your mind even before you place a trade. When your system is simple, you have no internal conflict. There is nothing to debate. There is no tug of war between indicators. There is no second guessing. You either have a setup or you don't. You either follow your plan or you violate it. All the psychological weight disappears because simplicity places the responsibility on you, not on the market or the strategy. Confidence grows when you stop overloading your mind with contradictory information. Commitment grows when you no longer have 20 ways to avoid following your rules. Clarity grows when the path is obvious. And then you begin to experience a different kind of trading, a quiet trading, a trading where you act, observe, and respond not based on emotion but based on rules that are clear enough to anchor your mind. You begin to recognize that the market doesn't pay you for complexity. It pays you for execution. It pays you for discipline. It pays you for staying aligned with your edge long enough for probability to work. Clarity is power. The clearer you are, the less emotional you are. The less emotional you are, the more consistent you become. Confidence is strength. The more you trust your process, the less you depend on outcomes for reassurance. The less outcome dependent you are, the more stable your decisions. Commitment is mastery. The more faithfully you execute your edge, the more predictable your long-term results become. Complexity is a trap. Clarity is liberation. Confidence is stability. Commitment is success. The trader who embraces this truth becomes unstoppable, not because they win every trade, but because they are no longer held hostage by emotions, confusion, or self-doubt. They know what they're doing. They know why they're doing it. They know they don't need to predict. They only need to act. And in the end, that is what the market rewards, not intelligence, not complexity, not brilliance, but the ability to execute a simple edge with unwavering clarity, deep confidence, and absolute commitment. Consistency in trading is never born from complexity, certainty, or the illusion of control. It comes from clarity in your rules, confidence in your edge, and unwavering commitment to a probabilistic mindset. When you stop fighting uncertainty and start embracing it, your decisions become cleaner, your emotions quiet down, and your actions finally align with the logic of the market instead of the fears of your mind. The moment you choose simplicity, discipline, and psychological neutrality over chaos and emotional reaction, you step into the small circle of traders who win consistently, not because they know more, but because they execute better.